Hello students, in this lecture I am revising various punishments in corporate laws. At CA inter level we are having 12 chapters in corporate laws and you will find various punishments in all these 12 chapters. I have compiled all these punishments into a single document. Now I will revise all those punishments in this video lecture. The first one is incorporation of company, reservation of name. The first step for incorporation of company is reservation of name. One has to file an application for reserving the name of company. And if it is found that the name was applied by furnishing wrong or incorrect information and company has not been incorporated yet, then the reserved name shall be cancelled and the applicant shall be liable to a penalty which may extend to 1 lakh rupees. Suppose company already incorporated, then rectification of name provisions will apply. So here company not yet incorporated. In that case, the reserved name shall be cancelled and applicant is liable to pay a penalty up to 1 lakh rupee, maximum 1 lakh rupee. Second one, furnishing false or incorrect information at the time of incorporation and company has not been incorporated yet. See, for incorporating company, one has to file various documents with registrar of companies, namely MOA, AOA, declaration by subscribers, declaration by directors, declaration by professional, address for temporary correspondence, written consent from the directors, yes or no. Now suppose person furnished false declaration or person suppressed material information. In that case, that person will get a punishment under section 447. Third one, company already incorporated by furnishing false or incorrect information, sir. Second one, incorporation not yet finished. Third one, incorporation completed, company came into picture. In that case, promoters of the company, first directors of the company and the persons who made declaration under this section will get punishment under section 447. So what is the punishment of section 447? I will revise it in prospectus chapter. Just wait a couple of minutes. Next one, section 8 company's punishment. If any section 8 company contravenes the provisions of section 8, violates the directions issued by the central government, conditions laid by the central government, then that section 8 company will be punished with a fine minimum 10 lakhs, maximum 1 crore. And the defaulting officer is liable to pay a fine minimum 25,000, maximum 25 lakhs. Suppose the affairs of the company were conducted fraudulently, then every defaulting officer shall be liable for action under section 447. See, in the entire Companies Act, wherever you read the word fraud, immediately section 447 comes into the picture. The person whoever commits fraud, whoever conducts affairs in a fraudulent manner will get punishment under section 447. Next one, rectification of name. Yes, whenever infringement of trademark happens or whenever the name of a company, the name of the company is similar to the name of existing company, in those cases central government will issue an order to rectify the name. And it is the duty of the company to comply the directions for rectification. Suppose if company fails to comply the directions within the prescribed time period, then during the delay period or during the default period, company is liable to pay 1,000 rupees for each day and defaulting officer minimum 5,000 rupees fine, maximum 1 lakh rupees fine. Next one, alteration of memorandum or articles. See, whenever company alters its memorandum, whenever company alters its articles, it is the duty of company to disclose the fact altered on the each and every copy of MOA and each and every copy of AOA. So without disclosure of alteration, if they circulate MOA, AOA, then for each copy, the company and defaulting officer is liable to pay penalty of 1,000 rupees. So 1,000 rupees penalty is for each and every copy which was issued without such alteration. Next one, change of registered office. Yes, a company can shift its registered office from one city to another city, from one ROC jurisdiction to another ROC jurisdiction, and from one state to another state. In those cases, a company has to file a series, various documents with a regional director, a registrar of companies. If company makes any delay, any default in complying with the requirements of this section, company is not filing the documents with the registrar within the prescribed time limit. In that case, for each day delay, For each delayed day, company and defaulting officer is liable to pay penalty of 1000 rupees. So 1000 for every day, but maximum 1 lakh rupee. Suppose 50 days delay is there, sir. 50 days into 1000, 50,000. 90 days delay, 90,000. 120 days delay, actually 1,20,000, but there is a ceiling limit on the punishment. The ceiling limit is 1 lakh rupee. Company is liable to pay penalty 1 lakh. Defaulting officer is liable to pay penalty 1 lakh. Commencement of business. Every company with share capital incorporated on or after 2nd November 2018 is required to file a declaration with ROC before commencement of business. Form number INC 20A. Yes or no? Form number INC 20A. And the time limit for filing this form with ROC is 180 days. Within 180 days of incorporation, company has to file a declaration regarding commencement of business with registrar. Failure to comply with the requirements of this section, company is liable to pay penalty 50,000. Defaulting officer 1,000 rupees for every day, maximum 1 lakh rupee. Maximum 1 lakh rupee. Next chapter, prospectus and allotment of securities. If a prospectus is issued in contravention of provisions of section 26, see section 26 speaks about matters to be stated in the prospectus, applicability of prospectus, inclusion of expert statement, validity of prospectus, filing of prospectus with the registrar. Any of these provisions got contravened, then company and a person authorizing the issue of such prospectus, will get a punishment. The punishment is minimum 50,000, maximum 3 lakh rupees. Minimum 50,000, maximum 3 lakh rupees. And next one, failure to comply with the provisions of section 33. Section 33 is all about abridged prospectus. Abridged prospectus. Whenever company is making a public offer, whenever company is issuing applications to the public, that application shall be accompanied with abridged prospectus. And the person whoever requests for full prospectus, it is the duty of company to provide full prospectus to the requested person. In case of any default, the company is liable to pay a penalty of 50,000 rupees for each default. So here the punishment is 50,000. Next one, misstatements in the prospectus. In case of misstatements in the prospectus, the punishment is whoever authorized the issue of such prospectus will get a punishment under section 447. So misstatement in the prospectus, the persons whoever authorizing the issue of such prospectus will be punished under section 447 of this act. Next one, whenever company makes allotment of securities, it is the duty of company to file return of allotment with ROC, and the time limit is 30 days from date of allotment. 30 days from date of allotment, company has to file return of allotment with a registrar. In case of delay, for each day delay, company as well as defaulting officer is liable to pay 1,000 rupees per day penalty. For each day 1,000 rupees penalty, maximum 1 lakh rupee. Maximum penalty is 1 lakh rupee. Next one, failure to comply with the provisions of section 40. Section 40 is all about utilization of application money. A company can utilize application money on satisfying two conditions. One is listing of its securities. First, the securities offered to the public must be listed on the recognized stock exchanges, and then company has to make allotment of securities. It's only after allotment company can utilize that application money. Until that point of time, all the application money shall be kept in a separate bank account in a scheduled bank. So company can utilize application money against allotment of securities. In case of contravention, company, the minimum fine is 5 lakhs, maximum fine is 50 lakhs. Defaulting officer, minimum 50,000, maximum 3 lakh rupees. Next one, punishment for fraud. Punishment for fraud. First, you need to identify the amount involved in the fraud. Amount involved in the fraud. Just wait. So in case of fraud, first you need to check whether public interest is affected or not. Sir, public interest is affected, sir. Public interest is affected. In that case, the imprisonment is minimum 3 years, maximum 10 years, and fine, minimum amount involved in the fraud, maximum 3 times of the amount involved in the fraud. Next one, public interest not affected, sir. Public interest is not there. Suppose in prospectus you furnished you provide wrong information, you provided false information. On the faith of prospectus, investors made investment and they lost the money. Now public interest is affected. In that case, this punishment is applicable. Suppose public interest not affected, there is no loss to the public. In that case, compare the amount involved in the fraud with 1% of turnover or rupees 10 lakhs, whichever is lower. Suppose amount involved in the fraud is equal to, just look at the point, amount involved in the fraud is greater than or equal to 1% of turnover or rupees 10 lakhs, whichever is less. In that case, the punishment is imprisonment minimum 6 months, maximum 10 years, and fine minimum amount involved in the fraud, maximum 3 times of the amount involved in the fraud. Other cases, that means fraud amount involved in the fraud is less than 1% of turnover, less than, here identify the symbol less than, here the symbol is greater than or equal to, less than 1% of turnover or rupees 10 lakhs, whichever is lower. In that case, imprisonment up to 5 years or fine up to 50 lakhs or both. So same points are there in this document also. You can see fine up to 50 lakhs, imprisonment up to 5 years, sometimes both. That means end. Is it clear? Next one, return of allotment in case of private placement. In case of private placement, yes, company has to file return of allotment within 15 days of allotment. In case of delay, the company, promoters, directors, these 3 people, promoters, directors, company, liable to pay penalty. How much, sir? 1,000 per day, maximum 25 lakhs. 1,000 per day, maximum 25 lakhs. Next one, private placement. Within 60 days of receipt of application money, company has to make allotment. Company has to allot securities for all the application monies received by the company. Such allotment shall be done within 60 days from the date of receipt of application money. If company fails to make allotment, then application money shall be repaid within 15 days after the expiry of 60 days. And if company fails to repay that application money within the set period of 15 days after expiry of 60 days, then company is liable to pay interest at the rate of 12% per annum from the expiry of 60th day. So here there is a small correction, just make a note of it. The correction is within 15 days after expiry of 60 days. If company fails to repay application money within 15 days after expiry of 60 days, then company is liable to repay that money along with interest at the rate of 12% per annum from the 60th day onwards. Next one, punishment for contravening the private placement provisions. Company has to refund all the monies along with interest within a period of 30 days, and promoters and directors will be punished with a fine. How much, sir? How much fine, sir? Minimum amount raised through private placement, maximum 2 crores. So simply amount raised through private placement or 2 crores, whichever is lower. So this will be the fine amount. Yes, promoters of the company, directors of the company has to pay this fine for contravening the provisions of private placement. Next one, share capital and debentures. Issue of duplicate certificates. If company makes any mistake, if company issue duplicate certificate in fraudulent manner, then minimum fine is 5 times of the face value of shares involved, maximum fine is 10 times of face value of shares involved or 10 crores, whichever is higher. Suppose Duplicate certificates. Company issued 1 lakh rupees face value of duplicate certificates. Then minimum fine is 5 times of 1 lakh, that is 5 lakhs. Maximum 10 times of 1 lakh or 10 crores, whichever is higher. That means 10 crores. So the range of fine is 5 lakhs to 10 crores. Range of fine is 5 lakhs to 10 crores. Defaulting officer will get punishment under section 447. Issue of shares at discount. Company is prohibited from issuing shares at a discount. Of course, we had two exceptions. One is sweat equity shares, and the other one is statutory resolution plan. According to the statutory resolution plan or debt restructuring scheme, a company is permitted to issue shares at discount. Apart from these two situations, company is prohibited from issuing shares at discount. If any company is issuing shares at discount, then that company has to refund all the monies along with interest at the rate of 12% from the date of issue of shares, and the defaulting officer is liable to pay penalty. How much penalty, sir? Issue proceeds, amount involved in the issue, or 5 lakh rupee, whichever is less. So penalty is issue proceeds or 5 lakh rupee, whichever is less. Punishment for violation of section 56, that is transfer and transmission of securities. In section 56, yes, we have seen various time limits. Within 2 months of incorporation, company has to issue share certificate in the name of subscriber. Within 2 months of allotment, company has to issue share certificate. In case of transfer or transmission, company has to issue share certificate or security certificate within 1 month. Yes or no? And moreover, whenever company receives a share transfer deed and share certificate, it is the duty of company to register the transfer and issue the share certificate in the name of transferee. Contravening these provisions, company and defaulting officer will get a penalty. They are liable to pay a penalty of 50,000 rupees. Next one, punishment for personation of shareholder. Personation means changing the identity. Suppose you are the real member of the company, you are holding 1,000 face value of securities. You are holding 1,000 securities in that company. One day what I did, I went to the company and I'm acting as if I'm the member of the company. Actually, I'm not the member. Your name is also Subramaniam, my name is also Subramaniam. Now I'm going to the company and I'm claiming that I'm the owner of those shares. So I should receive all those dividends. I should receive all those bonus shares. I should receive, all the benefits with respect to those shares. Like that, I'm acting as if I'm a member of the company, but I'm not actual member. So this is nothing but personation. And person, whoever is making such a personation, will get a punishment. The punishment is imprisonment minimum 1 year, maximum 3 years. In addition to imprisonment, there is also a fine. Fine minimum 1 lakh rupee, maximum 5 lakh rupees. Next one, contravention of the orders of the tribunal, refusal of registration and appeal against refusal. See, I submitted transfer documents to the company and company is not registering the transfer. I went to tribunal. Tribunal passed order against the company. Hey company, come on, register the transfer. And company is not, the person who is responsible to comply the directions of tribunal is not listening to the directions of the tribunal. He is not obeying the order of tribunal. Then that person will get a punishment, imprisonment minimum 1 year, maximum 3 years, and fine minimum 1 lakh, maximum 5 lakh rupees. Next one, penalty for default in filing of notice with registrar. Now, whenever company makes alteration of capital clause, it is the duty of company to file a notice with ROC. The time limit is 30 days. Form is SH7. If company makes default in filing that notice, then company is liable to pay penalty 500 per day during default period, maximum 5 lakhs. Defaulting officer, the penalty is 500 per day during the default period, maximum 1 lakh. Suppose default period is 30 days. 30 days into 500, 15,000. Company, 15,000 penalty. Defaulting officer, 15,000 rupees is the penalty. Next, contravention of section 67, restriction on purchase of its shares. A company can advance money to its employees to purchase or subscribe fully paid up shares of the company. But there are some restrictions, maximum 6 months salary it can advance. And employee excludes director's KMP. And the person after getting that loan amount, he should subscribe only fully paid up shares. He should purchase only fully paid up shares. Contravening any of these provisions, contravening, violation of these provisions, section 67, then company, the punishment is minimum 1 lakh rupee fine, maximum 25 lakh rupee fine. Defaulting officer, imprisonment up to 3 years, and fine minimum 1 lakh rupee, maximum 25 lakh rupees. Contravention of section 68, buyback, violation of any of the provisions that are there in the buyback, section 68, then the punishment is, company as well as defaulting officer is liable to pay minimum fine of 1 lakh, maximum fine of 3 lakh rupees. Minimum 1 lakh, maximum 3 lakhs. Next one, deposits. It is the duty of company to repay deposits on maturity date. When they were claimed, it is the duty of company to repay deposits on the maturity date. In case of failure, company, in addition to repayment of deposit, it is liable to pay interest at the rate of 18% per annum for the overdue period. Multiple choice question point of view, important point. Next one, if company contravenes any of the deposit rules and for which no punishment is provided in the Companies Act, in those cases, the punishment to the company is fine up to 5,000 rupees. In case of continuing failure, for each day 500 rupees is the additional fine. And the same punishment is with respect to defaulting officer also. Next one, punishment for contravention of section 73 or section 76. Section 73, section 76 is all about acceptance of deposits from members, acceptance of deposits from non-members. So when you accept deposits against to the provisions of 73, violating the provisions of section 76, then the punishment to the company is minimum 1 crore or twice the amount of deposits accepted, whichever is less, maximum 10 crores. Suppose deposits accepted worth 2 crores. Now 1 crore or 2 times of the deposits. 2 times of the deposit means 2 into 2 crores, 4 crores. 1 or 4, whichever is less, means 1 crore. And maximum 10 crores. Defaulting officer, he will get imprisonment and fine. Imprisonment up to 7 years and fine minimum 25 lakhs, maximum 2 crores. Punishment for non-repayment of deposits. Above point, accepted deposits, violation of the provisions. Acceptance of deposits against violation of the provisions. 29th point is punishment for non-repayment. You are not returning the amount of deposits. In that case, company, minimum fine amount 1 crore, maximum 10 crores. A defaulting officer, imprisonment up to 7 years, fine minimum 25 lakhs, maximum 2 crores, sometimes both. Imprisonment or fine or both. In case of willful default, with an intention to deceive, with an intention to defraud the stakeholders, then punishment is section 447. Punishment, you will get punishment which is prescribed under section 447. Next one, registration of charges. Only one punishment is there in registration of charges. Violation of chapter 6, that is registration of charges. The punishment is company 5 lakh rupees, defaulting officer 50,000 rupees. In case of willful wrong, in case of willfully furnishing wrong information, incorrect information, then that person is liable for action under section 447. Just few minutes back I told you, a person whoever commits fraud, whoever initiates the fraud will get a punishment under section 447. Next one, management and administration. So penalty for failure to maintain registers in accordance with provisions of section 88. So the punishment, company penalty 3 lakh rupee, defaulting officer penalty 50,000 rupees. Not maintaining register of members properly, not updating register of members properly, not maintaining register of members at registered office. So if there is no proper register of members, then the company and defaulting officer will get these penalties. Company 3 lakhs, defaulting officer 50,000. And all the offences under this section are compoundable offences. That means with compromise you can withdraw the case. Non-compoundable offences, they are severe offences for which court judgment is compulsory. Coming to compoundable offences, yes, you can withdraw the case, you can enter into compromise arrangement. Next one, penalty for default under section 89. So section 89 is all about furnishing declaration by registered owner, by beneficial owner, and by company. So the applicable time limit is 30 days. In all the cases 30 days. Beneficial owner has to file a declaration with company within 30 days of acquiring beneficial interest. Registered owner has to file a declaration with company within 30 days of acquiring legal interest without beneficial interest. And company has to file that information with ROC within the 30 days after getting that information from both registered owner and beneficial owner. In case of delay, the registered owner and beneficial owner will be penalized with 50,000 rupees, and if it is a continuing failure, then for each day 200 rupees is the additional penalty, maximum 5 lakh rupees. So this will be very simple, 50,000 plus 200 into number of days less than or equal to maximum how much? 5 lakh rupees. Company 1000 per day in case of continuing failure, maximum 5 lakhs. Defaulting officer 1000 per day in case of continuing failure, maximum 2 lakh rupees. Next one, penalty for default under section 90. So section 90 is all about significant beneficial owners, right? 89 beneficial ownership, section 90 significant beneficial ownership, and the punishment is SBO 50,000 rupees plus 1000 per day in case of continuing failure, maximum 2 lakhs. Company 1 lakh rupee plus 500 rupee in case of continuing failure, maximum 5 lakhs. Defaulting officer 25,000 rupees penalty, and in case of continuing failure 200 per day, maximum 1 lakh rupees. Next one, penalty for default with respect to closure of registers. At any point of time, at one point of time, a company can close its registers for a period maximum 30 days. And during the entire financial year, company can close its registers for maximum 45 days. Contravening these provisions, if you are closing registers for a period more than 30 days at a point of time, or for more than 45 days during the entire financial year, per day, so default period per day, company as well as defaulting officer will get a penalty, is liable to pay a penalty of 5,000 rupees, maximum 1 lakh rupee. Suppose 10 days default is there, 10 into 5,000, 50,000 rupees. 20 days default is there, 20 days into 5,000, 1 lakh rupees. So maximum penalty 1 lakh rupee. Next, this one is important penalty, important penalty. Penalty for default in filing annual returns. Company is liable to pay a penalty of 10,000, and in case of continuing failure, 100 per day. I told you 60 days is the time limit. 60 days after completion of AGM, company is required to file annual return with ROC. Suppose it is filing on 70th day. Now how many days delay happened? 10 days delay happened. 10 into 100, 1000. So 10,000 plus 1000. The maximum punishment is 2 lakh rupees in case of company, 50,000 rupees in case of defaulting officer. In the hands of defaulting officer, the penalty is 10,000 rupees plus additional penalty of 100 per day in case of continuing failure, maximum 50,000 rupees. And the CS in practice, practicing professional, whoever certifies annual return which is not in accordance with section 92, so he will be penalized with 2 lakh rupees. Certification of annual returns. Next one, penalty for default for refusing the inspection. Member of the company can inspect a register of members' annual returns and copies thereof. Suppose if company is not allowing him for the inspection, then company as well as defaulting officer will be penalized with an amount of 1,000 per day. How long they prohibit him from inspection? For that period, 1,000 per day they need to pay penalty, and the penalty is maximum of 1 lakh rupees only. Next one, penalty for contravention of the provisions of section 102. Section 102 is all about explanatory statement. Explanatory statement is compulsory for all special business items. And with respect to these special business items, if the director, promoter or KMP or relatives of these people had any interest in the special business items, they have to disclose that interest in the explanatory statement. Failure to disclose that interest in the explanatory statement, these people, promoters, director, manager and other KMP who are in default are liable to pay a penalty of 50,000 rupees or 5 times of the benefit accrued, whichever is higher. So the penalty will be 50,000 rupees or 5 times of the benefit accrued, whichever is higher. So this penalty is levied only in case of non-disclosure of interest in the explanatory statement. Next one, proxy. See, the benefit of proxy is available. Yes, company has to communicate that benefit to the members. That communication can be done only through the notice. In case of non-disclosures, the defaulting person is liable to pay a penalty of 5,000 rupees. Non-disclosure of proxy benefit in the notice, the defaulting person shall be liable to pay a penalty of 5,000 rupees. And next one, selecting proxy, selection of authorized representative is the choice of member. Now company cannot impose restrictions on the person. You need to choose a person whose name is mentioned in the list. So you have to choose the person name which was mentioned in the list. So you can't choose outsiders. So like that, if any restriction was placed by any person of the company, any person, any officer of the company, then that officer of the company will be penalized with 50,000 rupees. Then that officer of the company is liable to pay a penalty of 50,000 rupees. Are you getting my point, students? Next one, circulation of members' resolutions, section 111. In case of default, in complying with section 111, company and of defaulting officer is liable to pay a penalty of 25,000 rupees. So the applicable penalty limit is 25,000 rupees. Next one, section 117, ROC filings. Within 30 days of passing special resolution, within 30 days of entering into an agreement with managing director, all these resolutions and agreement copies shall be filed with the registrar. The time limit is 30 days. In case of delay, the punishment is company 10,000 rupees, and if it is a continuing failure, 100 per day, maximum 2 lakhs. Next one, defaulting officer including liquidator. A same punishment but maximum penalty is 50,000 rupees. Next one, penalty for contravention of provisions of minutes. Company is not maintaining proper minutes, then company, the penalty is 25,000 rupees. Defaulting officer penalty is 5,000 rupees. In case of tampering of the minutes, changing the content of the minutes, that person, whoever found guilty of tampering, he will be sent to jail, imprisonment up to 2 years, and fine minimum 25,000 rupees, maximum 1 lakh rupees. Next one, punishment for default in filing report on AGM. All listed companies are required to file report on AGM with ROC within 30 days of AGM. In case of default, delay, then company is liable to pay penalty 1 lakh rupee. In case of continuing failure, 500 per day, maximum 5 lakhs. So simply 1 lakh plus 500 into number of days delay, maximum 5 lakh rupees. So this is the penalty on the company. In case of defaulting officers, in the hands of defaulting officers, 25,000 rupees is the penalty. In case of continuing failure, 500 per day, maximum 1 lakh rupees. Next, dividends. Only three punishment provisions are there. One is delay in transferring amount to unpaid dividend account. Within 7 days after 30 days of declaration of dividend, any dividend which remains unpaid or which remains unclaimed or unpaid, that amount shall be transferred to unpaid dividend account. So what is the time limit? 7 days from the expiry of 30 days of declaration of dividend. In case of delay, company is liable to pay interest. How much? 12% per annum. Next, section 124. Delay in transferring amounts to unpaid dividend accounts. Delay in preparing the statement containing the particulars of the details of the persons, who didn't claim dividends or whose dividends remains unpaid. So complaints, failure to comply the provisions of section 124, the company is liable to pay penalty of 1 lakh. In case of continuing failure, 500 per day, maximum 10 lakhs. Defaulting officer, 25,000 rupees, 100 per day in case of continuing failure, maximum 2 lakh rupees. Next one, punishment for failure to distribute dividends within 30 days. So company is liable to pay interest at the rate of 18% per annum in addition to dividend amount. Defaulting the director, fine. How much, sir? during the default period, how many days, no, the number of days, the company failed to pay the failed to distribute the dividends. So for that period, multiply with 1000. Suppose company made a delay of 60 days in distributing the dividends, then defaulting director is liable to pay fine of 60,000 rupees. 60 into 1000. Next one, accounts of companies. Section 128, company has to maintain proper books of accounts. Proper books of accounts means, books of accounts shall be maintained on accrual basis in double entry system, and books of accounts shall exhibit true and fair view. Non-compliance of these provisions, the managing director or whole-time director in finance or CFO of the company or any other person of a company charged by the board will be punished with fine minimum 50,000, maximum 5 lakh rupees. Next one, section 129, financial statements. Financial statements shall be presented in form schedule 3, prepared in accordance with accounting standards, and financial statements shall exhibit true and fair view of the state of affairs of the company. In case of violation, the managing director, whole-time director in charge of finance, CFO, person charged by the company, any other person of a company charged by the board, in the absence of above people, then all the directors will get the punishment. Now the punishment is imprisonment up to 1 year, a fine 50,000 rupees, minimum 50,000, maximum 5 lakhs, sometimes both imprisonment and fine. So what is the punishment? Imprisonment up to 1 year or fine minimum 50,000, maximum 5 lakhs, sometimes both. Next one, where a professional or other misconduct is proved, then NFRA shall have the power to make the order, penalty. In case of individual auditor, minimum 1 lakh rupees is the penalty, maximum 5 times of the fees received. In case of firm of auditors, firm of practicing chartered accountants, minimum 5 lakhs, maximum 10 times of the audit fees received by them. In addition to the imposing penalty, NFRA is having power to debar the member from practice. And minimum debar period, minimum ban period is 6 months, maximum ban period is 10 years. Next one, contravention of section 134, that is provisions relating to board report. Company is liable to pay a penalty of 3 lakhs. The defaulting officer is liable to pay a penalty of 50,000 rupees. Next one, contravention of section 135, corporate social responsibility. So violation of section 135 provisions, the punishment is company is liable to pay penalty 2 times of the amount required to be transferred by company to the fund or unspent CSR account, or 1 crore rupees, whichever is less. So twice the amount to be transferred to the fund account or unspent CSR account, or 1 crore rupees, whichever is less, is the penalty on the company. Defaulting officer 1/10 of the amount to be transferred, or 2 lakh rupees, whichever is less. So company 2 times or 1 crore, whichever is less. Defaulting officer 1/10 or 2 lakh rupees, whichever is less. Next one, section 136, circulation of financial statements. Contravention of section 136, company is liable to pay penalty 25,000, defaulting officer 5,000 penalty. Next, section 137, filing of financial statements. I told you within 30 days after conclusion of annual general meeting, it is the duty of company to file financial statements with ROC. In case of delay or in case of default, fine of 10,000 rupees plus penalty 100 per day in case of continuing failure, maximum 2 lakh rupees. Now coming to the MD and CFO, fine is 10,000 rupees, penalty is 100 per day in case of continuing failure, subject to 50,000 rupees. This is the maximum punishment. Suppose if MD CFO is not there, in the company MD CFO is not appointed, then any other director who is charged by the board with the responsibility. Suppose this person is also not there, no person was authorized, no person is charged by the board with the responsibility, then all the directors of the company will get this punishment. Next one, audit and auditors. Default in filing resignation statement. Default in filing resignation statement. If an auditor of a company did not file a statement, then auditor shall be punished with a penalty minimum 50,000 rupees or audit remuneration, whichever is less. A maximum, in case of continuing failure, add 500 rupees per day subject to 2 lakh rupees. So the fine amount will be, the penalty amount will be 50,000 or audit remuneration, whichever is less. Plus in case of continuing failure, 500 per day, maximum 2 lakh rupees. Next one, contravention of section 139 to 146. Yeah, forgot to tell you, this point was tested in very recent examination, very recent examination. So I think the question was asked for 4 marks. So I hope, from this document, I can expect a minimum 5 to 6 marks. So this will be very helpful to you. Just download this document and revise the penalties, revise the penal provisions, twice, thrice, multiple times. Whenever you feel free time, just go through these fines. I'm making your work very easy. Next, contravention of section 139 to 146 sections. Section 139 to 146. Company, minimum fine 25,000, maximum 5 lakhs. A defaulting officer, minimum 10,000 rupees, maximum 1 lakh rupees. Next one, auditor of the company contravenes any of the provisions of section 139, appointment of the auditor. Before appointing someone as an auditor, that person, the proposed candidate, has to furnish a written consent with the company, and he has to give a declaration that, the proposed engagement is within the limits only, and I'm not disqualified to act as, I'm not disqualified from acting as an auditor of the company. Like that, he need to furnish information with the company. And he should not provide prohibited services while acting as an auditor. And he is having a duty to sign the audit report. So violation of these provisions, he will be punished with a fine minimum 25,000 rupees, maximum 5 lakh rupees, or 4 times of the remuneration of the auditor, whichever is less. So minimum 25,000, maximum 5 lakhs, or 4 times of the remuneration. Suppose, remuneration is 50,000, then 5 lakhs or 4 times of 50,000. That means 5 lakhs or 2 lakhs, whichever is less, so 2 lakhs. So minimum 25,000, maximum 2 lakhs. Next one, penalty for knowing or willful contravention. So willful contravention, in that case, same above punishment is applicable, but the change is maximum penalty, you will find 8 times of the remuneration. In addition to that, you will find imprisonment up to 1 year. Imprisonment up to 1 year. Next one, companies incorporated outside India. So if a foreign company contravenes the provisions of chapter 22, similar to registration of charges, there also we will find only one punishment. Here also one punishment. Contravention of provisions of chapter 22, the company, foreign company, will be punished with a fine minimum 1 lakh and maximum 3 lakhs. If it is a continuing failure, additional fine of 50,000 per day is there. And then defaulting officer will be punished with minimum fine of 25,000 to maximum fine of 5 lakh rupees. Next one, a limited liability partnership. So limited liability partnership, punishment for false declaration at the time of incorporation. At the time of incorporation of LLP, if any person furnish false declarations, wrong information, then imprisonment up to 2 years. A fine minimum 10,000 rupees, maximum 5 lakh rupees. Next one, punishment for fraud. Imprisonment up to 5 years and fine minimum 50,000 rupees, maximum 5 lakh rupees. Punishment for false statements. LLP is required to file annual returns with ROC. Next, a statement of account and solvency with ROC. If any person furnish a false statements, then imprisonment is up to 2 years, fine minimum 1 lakh, maximum 5 lakh rupees. Clear? Next one, any person who without lawfully excuse fails to comply with any summons or requisition of the registrar under this section shall be punishable with fine minimum 2,000, maximum 25,000. Non-compliance of registrar summons, non-compliance with registrar requisitions, then minimum fine is 2,000 rupees, maximum fine is 25,000 rupees. Next one, contravention of NCLT order with respect to compromise or arrangements. LLP will get a punishment. LLP is liable to pay a penalty of 10,000 rupees. In case of continuing failure, 100 per day, maximum 1 lakh rupee. And every designated partner is liable to pay a penalty of 10,000 rupees. In case of continuing failure, it is 100 per day, maximum 50,000 rupees. Next one, if the LLP contravenes the provisions of section 7 subsection 1, that is all about designated partners. If LLP is not complying with the provisions of designated partner, then LLP is liable to pay a penalty of 10,000 rupees, and in case of continuing default, 100 per day, maximum 1 lakh rupee. And every partner is liable to pay a penalty of 10,000 rupees. In case of continuing default, 100 per day, maximum 50,000 rupees. And if LLP contravenes the provisions regarding failure to file the consent of appointment of designated partner within 30 days of the appointment, then the penalty in the hands of LLP, 5,000 plus 100 per day during default period, maximum 50,000. Designated partner, 5,000 rupees plus 100 per day in case of continuing default, maximum 25,000. See, identify the difference between these penalties. Some cases all the partners, some cases designated partner. First try to identify the difference and then remember those penal provisions. Next one, if the LLP contravenes the provisions of subsection 5 of section 7 or section 9, designated partner disqualification. Suppose designated partner is disqualified, but still we are continuing with the same person, or we appointed disqualified person as designated partner, then LLP is liable to pay a penalty of 10,000 rupees plus 100 per day in case of continuing default, maximum 1 lakh. And every partner is liable to pay penalty of 10,000 rupees plus 100 per day in case of continuing default, maximum 50,000 rupees. If LLP contravenes any provisions of registered office and changes therein, the penalty is 500 per day, maximum 50,000 rupees. And then registration of changes in partners. If any partner contravenes the provisions of that section, penalty is 10,000. If LLP contravenes the provisions of that section, LLP and every designated partner is liable to pay penalty of 10,000 rupees. Next one, failure of non-filing of penalty for non-filing of statement of account and solvency. So LLP is liable to pay penalty 100 per day during such default period or delay period, maximum 1 lakh rupee. Designated partner 100 per day, maximum 50,000 rupees. Next one, non-maintenance of proper books of accounts, non-maintenance of not preparing statement of account and solvency. The penalty is minimum 25,000, maximum 1 lakh in the hands of LLP, minimum 10,000, maximum 1 lakh in the hands of every designated partner. A small correction, in case of non-maintenance of proper books of accounts, not preparing statement of account and solvency, in the hands of LLP, minimum penalty 25,000, maximum 5 lakhs. Every designated partner, minimum 10,000 rupees is the penalty, maximum 1 lakh rupees is the penalty. Clear? Next one, penalty for non-filing of annual returns, in the hands of LLP. LLP is liable to pay penalty 100 per day during the delay period, maximum 1 lakh. And designated partner 100 per day, maximum 50,000 rupees. So this is all about various punishments in corporate law. So with this, the lecture is completed.